I want to bring in Tiffany Wilding, Pimco chief U.S. economist. She joins us today out there in Newport Beach, California, where a primary currency, according to some folks, that should give us a little bit more room to do more with regards to central bank policy. Is that enough, Tiffany?
Yeah, well, thanks for having me. Well, I think one of the reasons why, bond markets today, might be not performing as we would traditionally expect it to perform, just given the decline in equities, is because investors are starting to ask, what the Federal Reserve will do because the bond market is already pricing the Fed to take front-end interest rates already down to zero. I think there's starting to be some more questioning around what other things can the Fed do. And we think that, some of these, the playbook that the Fed has used by, lowering interest rates, even doing QE in past crisis, that might not be particularly effective against this very unique type of shock. So the Fed obviously can't stop the virus spread. Some of the disruption in businesses that will be related to some of the social distancing policies, outright quarantines or travel moratoriums. The Fed and monetary policy, which works through long lags, is not going to be able to offset, those near-term disruptions. So I think that is some of the concern that you're seeing reflected in markets today.
We did see, Tiffany, the Bank of England come out with some big announcements this morning that was buttressed by, of course, the UK government with their budget announcement as well. That kind of set the scene for what the European Central Bank could announce when they come out with their decision tomorrow. Does the BOE, working in conjunction with the UK government, coming out with, some people call it a bonanza, a bazooka, does that make it easier for the U.S. or for the ECB to come out with something similar?
Yeah, I think we need to see that type of, more targeted policies coming from central banks as well as the fiscal authorities. I think, certainly that the Europeans and the U.S. government should be able to get this done. But I think the important thing here is that the focus should be really on, from the central bank perspective, keeping markets functioning so that you don't have these these stress events which cause things to get worse because they result in banks pulling back on credit or the inability to get credit. And so you need targeted policies that are there to deal with that kind of potential stress, whether it's monetary policy providing, some sort of funding backstop to markets, or it's a fiscal policy which, in addition to healthcare related policies, is providing targeted funding to corporations that are seeing what should be temporary dislocations, but that are under stress.
All right, so why haven't we seen that already, though, Tiffany? This has been unfolding for some time now. You kind of get this sense that it's the financial markets trying to dictate to the Fed what they should do. It's like the tail wagging the dog here. And you go back to the financial crisis, I think there was a general sense, and there were a lot of issues that happened during the financial crisis with regards to the policy response. But generally speaking, it was generally believed that the Fed and that central bankers at least had this under control, or at least knew more than the market. That doesn't feel like what we're witnessing right now.
Well, I think the other thing with this is there's just a lot of uncertainty around kind of the virus itself, the extent to which it spreads, and kind of the robustness of financial markets and the broader economy when that happens. We've never really seen a global shock like this. It's certainly possible that you could have, it's a distinct possibility that you could have the sort of global recessions in the countries, or recessions in the countries that are most affected. And so I think that at least from the Federal Reserve, there was some, at first, kind of some want to wait and see how this plays out, before taking more drastic actions. But, I think ultimately they did come in with an emergency 50 basis point rate cut. We think they'll cut rates again, at the meeting next week, if not before, by 50 basis points at least. And then ultimately they probably will go back down to the zero lower bound coming up.